Wealth managers find reasons to be cheerful on global economy. Looking back at the third quarter of this year, there were gains in all currencies and risk categories. Sterling portfolios achieved an average return across each three risk categories of 1.7%. Euro portfolios posted slightly higher returns, ranging from 1.5% for low risk to 2.3% for high risk, while US dollar low risk portfolios outperformed those in the high risk category. Equity weighting increased for medium and high risk mandates, but in low risk mandates, allocations to cash and fixed income increased at the expense of equities and alternatives. Optimistic indicators. The US yield curve inverted in the summer, often seen as a signal for economic woes, and manufacturing activity, as measured by the PMI, came in at 47.8%, the lowest level for a decade. In response to the deteriorating economic outlook, the Fed cut rates twice broadly as expected. However, according to Frédérique Carrier, head of investment strategy at RBC Wealth Management, there are many indicators that give reason to remain positive about the US. The US consumer is an area which remains robust, housing prices remain firm, the unemployment rate is at a 50-year low and the savings rate at a robust 7%, he says. In the UK, there were modest gains for equities as a weaker sterling provided a boost for exporters. Investors favored more defensive stocks away from financials and commodities, which performed less well. In politics, Boris Johnson finally got the election he didn't want, just as the Conservatives were looking like they might get the working majority they need to deliver Brexit.Daniel Casali, chief investment strategist at Smith and Williamson, says the Conservatives returning to government should give us reason to be optimistic. We have become more constructive on UK equities over their international peers, he says. Casali adds the Conservative Party is likely to follow the US lead by cutting red tape. Under Trump, the US has cut over 32,000 pages, around 30%, of the US Federal Register of Regulations. While in the UK, the change in emphasis in the post-Brexit agreement with the wording around close alignment moving from the legal agreement to the political declaration gives more scope to deregulate and should lead to higher productivity. Making headway. Eurozone markets also made headway led by the defensive sector in July and August, with financials making a recovery in September. However, economic growth remained very weak with the economy expanding by just 0.2% in Q2. Germany, long considered the economic powerhouse of the Eurozone, only narrowly avoided a recession in Q3. However, according to Casali, concerns may be short-lived. While Germany relies heavily on China to buy its goods, we believe Chinese consumer strength is higher than many people think. We expect the effects of more credit stimulus trickle. For more on this story, visit the news article link.